Good afternoon, everyone. This is T3 Live Editor-in-Chief John Darcy here to bring you a daily recap. What was a long week, a lot of action, a lot of hoopla about various things. We got some important economic data that started coming back into the fold the last couple days. We had the Twitter IPO, and then today we had a big reversal back to the upside after yesterday's sharp sell-off. We can go ahead and take a look at the chart of the spiders to give you a visual of that. Yesterday, we had that big engulfing candlestick that everybody was talking about. You know, is this the Twitter top in the market? Is this, game over after we engulfed 2 weeks of price action in this one big down bar? But today, we erased almost all of those losses after some strong economic data this morning with the jobs report. And what people were worried about this morning with the jobs report was the idea that all this strong data with the strong GDP reading earlier in the week and then the strong jobs data is that the taper was back on the table. But ultimately, hopefully, the market is perceiving good as good again. We're sort of in this twisted environment still while while QE is still active in its full size. That bad news is good news is bad news. But I think it's very positive to see the market reverse today back to the upside after those surprising job gains in the morning. And talking about, excuse me. Going back to those job gains, when the taper talk starts coming into focus and people start talking about, potential QE tapering again, there's a group of ETFs and stocks that we watch for their potential reaction to the news. And we got, the reaction that you would expect today from a number of those assets that we watch, including bonds. Bonds, obviously, if QE starts to get tapered, rates are going to go back up, bonds are going to fall. That's obviously what we saw today with the TLT. Big down move in the TLT. And then you can look at the 2 times inverse ETF, the TBT. Yesterday, TBT was weak, came back down to those 8 and 21-day moving average, as people maybe were expecting weak data perhaps. But we ended up with a really strong report, gap and go to the upside. So this could mean higher rates coming up in the future. And, I think you'll continue to get speculation about potential QE tapering in December now. So something to watch for. And then gold. Gold, obviously, when you talk about QE tapering, QE is the biggest bullish catalyst for gold. And so when QE potentially starts to decrease in size, it's going to be bearish for gold. And so today, obviously, you got a big gap, or it's basically just a gap to the downside. Not much downside continuation, but still very bearish-looking chart on multiple time frames for gold. But interesting to note, in the gold miners, the GDX, we actually got a reversal back to the upside. So interesting divergence there. That we've seen at various times over the past few months, the gold miners diverge from the underlying asset gold a little bit. So interesting to note whether that correlation continues, but an interesting reversal to the upside in GDX today. You can talk about the utilities. Utilities are a sector that perform well in a low interest rate environment. They're going to get hurt a little bit in a rising interest rate environment. But as you can see on the chart, the market had that big reversal today, while the utilities, the XLU, was down big at one point during the day. It was actually able to reverse later in the day and get back to narrowly negative territory. But overall, interesting to note that divergence, and just reinforces all the the thesis that you talk about with rising rates and positive data, resparking the talk about QE tapering. So interesting to note. The other sector that responds to the tapering talk is the home builders. As you can see today, sort of similar to the XLU, is that the home builders were down pretty significantly while the market was bouncing during the day, but a late day surge helped the home builders to finish right near the flat line. But you can still call that relative strength due to the fact that the market did finish sharply positive, while these safe type sectors finished near the flat line. And then we'll talk about social media. Twitter, obviously the big name that IPO'd yesterday. And what we talked about is that they basically sucked all the value out of this IPO before it started opening for trading for the retail public. And yesterday did get a decent push from the 45 level up to a $50 area. Briefly touched 50, but came back down, closed actually below where it opened for trading. And today it opened higher again, but big down move during the session, closed 41.65. So this is one that could get a little bit more downside action. Like we said, they sucked all the meat off the bone prior to it opening for trading, and now we could get some downside or consolidation type action. It'll be interesting to see, a few months down the road when Twitter does start to report economic or their earnings data, what kind of data that is, because everybody's very skeptical about, yes, Twitter is in a hyper growth phase and stuff like that, but they still don't make any money. So it'll be very interesting to see how this stock reacts to earnings reports. And taking a look at the other names in social media, Facebook. Facebook's one that is sort of maybe has a little envy of Twitter here because it's been weak leading up to the Twitter IPO, and then in the 2 days of the IPO and today, the day after. And this is one that looks like it could be setting up a little bit of a bearish head and shoulders pattern. You draw our lines here. You can see here, the right shoulder is not terribly defined, but you have a very defined left shoulder, very defined head, and then the right shoulder over here. We're nearing the neckline of this pattern, so it's something to keep an eye on for next week, whether the Twitter IPO marked a little bit of at least a short-term top in the social media stocks, but Facebook definitely one that's not looking healthy, showed relative weakness today. And then LinkedIn. LinkedIn is one that was able to reverse, had a little red dog reversal today after 2 big down days on the Twitter IPO day and the day prior to that. Is one that looks like it's repairing a little bit, but also not a terribly bullish pattern here in LinkedIn. Filled this gap to the downside. Maybe that'll provide a little bit of short-term support. But you can see obviously LinkedIn's had a huge run over the last few years and in this year alone. So it's one that definitely wouldn't be the end of the world if it saw some more downside, maybe down the $200 area as more defined support. So definitely keep an eye on the social media stocks after the Twitter IPO this week. And just a couple other names that we've been keeping an eye on. Tesla got some real downside momentum this week, and today showed relative weakness again. You've had a couple car fires that have raised some red flags about the technology and brought some bad PR to Tesla. And then the earnings report obviously wasn't the blockbuster that the stock was pricing in. It's one that it's gotten to the point where it's pretty oversold right now. Yes, all the short-term moving averages are curling down, but it's one that I could definitely see reversing at some point. But if you're going to look for a reversal in a stock that's selling off this sharply, that's had such a huge run up, you definitely want to do it with a very tight risk management in place and a very calculated type strategy. So I want to keep an eye out for a potential reversal next week. It did bounce off its lows a little bit today, but nothing major to the upside. But like I said, want to keep an eye on. And then VJet. We talked about divergences this week with high beta tech stocks and momentum stocks getting hit under the surface. And then yesterday, after most of the damage was under the surface, yesterday the indices got hit. But it looks like the 3D printers are sort of the last man standing in high beta tech, in momentum land. Especially VJet is one we talked about in our Off the Charts newsletter. It was a very successful IPO, put in a wedge pattern. It allows you for a potential two-way entry. It breaks below or out of breaks below the wedge, you could potentially enter short. Breaks higher out of the wedge, you enter long. Obviously, it broke higher, and that's what we listed it as on Off the Charts. And we got a really nice move that continued today. Stock almost hit 45, closed on its highs of the day. So this is one that I think will continue to get good two-way action. And if you're looking to trade these types of names, and Mike Lee, Steve LeVay, and the Trade the Morning Mentoring Room are your best bet for following these 3D printers and just momentum stocks in general. This has been John Darcy here for your daily recap. Busy week, a lot of economic data. Next week, very light on economic data. No major IPOs like we had with Twitter this week. So, it'll be interesting to see what happens with the market when the market is boring. They say never short a dull market, and a lot of people think that yesterday's low could be a definite pivot swing low, sort of a launching pad for the rest of the year, because there's nothing really standing in the way of this market rallying. Santa Claus rally, whatever you want to say about that, into December. So something to keep an eye on, and we definitely maintain our bullish bias after today's reversal back to the upside. This has been John Darcy, your editor-in-chief here for the Daily Recap. We'll see you back here on Monday.